Mike Briggs is our cattle market analyst this week. Data from the USDA show beef prices rose again to new highs in the month of September. All fresh retail beef jumped nearly $1 from September 2013's mark to $5.92 per pound. Ground beef last month was $4.10 per pound, about 60 cents more expensive than a year ago. Thankfully, for the farmer or rancher buying and selling very pricey animals, the nation's farmers are currently harvesting record large crops of corn and soybeans, which can be used as feed sources. We talked with Mike Wednesday morning and asked about the continued increase in cattle prices during the month of October.
Pretty amazing. I don't think anybody ever thought anything like this could happen. It's been very good for profitability.
Yeah, you know, we keep talking about how it's been able to hold up this long, but it's not only holding up, it's increasing.
It is, and it's just because your supply of cattle are going to continue to go down until you get past the first part of the year. November is always a tough time to find fat cattle anyway, and this year it's just exacerbated by the rest of the situation that we're in.
So are you planning any differently into the future to, I guess, plan for extended high prices or continued high prices?
That's a really good question. The last cattle on feed, the September cattle on feed, we saw placements equal with and actually a little bit above last year, which is the first time we've seen that 4, 5, 6 months. I'd have to go back and look, but so at some point, and typically your October placements are pretty good too, so at some point in the future, you should have similar to last year's numbers when it comes to slaughter, and you got to kind of wonder what that's going to do to prices. So I think a guy's got to be real careful in just assuming that, well, high prices are high now, they're going to be high in the future. I don't know.
I know you thought that the supply of cattle would be tight in the fourth quarter this year, first quarter next year. You still hold that though?
Well, I think fourth quarter definitely. First quarter next year, I don't know, because you've seen these placements come up. Not all these placements are calves. Some of these are going to be yearlings, and that's when they're going to be ready, is that Jan-Feb time. And beef demand typically is very poor then. So if you have, you know, similar to or maybe a little bit greater slaughter receipts and you have poor demand, that's not exactly a great combination.
Tell me about the resiliency of the customer right now.
Absolutely amazing that we have not derailed ourselves, because competing meats are cheap, especially chicken. I think chicken's almost free. And yet people like beef. We've established that. It's a great product. We've done a good job improving on the product, and thankfully customers like it and are willing to pay for it. I don't know at what point they're going to say no, but they haven't yet.
Is that it? Is it just the strength of the product purely that's been able to keep this up?
It has to be. I mean, because if a consumer doesn't want to pay for something, they just flat won't, and they're willing to pay these increased prices.
Have we hit a harvest low in corn, do you think?
I don't believe so, because harvest is so slow. If you would have had this big, huge, fast push, I think we would have just crushed the corn market. But since it's just kind of been working its way through, it hasn't done that yet. I think the farmer's going to fill every last bit of his on-home storage. And then when we get to the end of the crop and there's still a bunch out there, then that's finally going to be where they sell it. And that's what's finally going to pressure the market. I don't believe we have gotten to that point. We've had a little up in the corn market here, and I think if a guy needs to sell something, he probably needs to get it done, because I think eventually it's going to roll right back over.
Falling to what price would make you really start to drool?
Anything under, you know.
Realistically now.
Well, I know. I think the low is like 318. You know, I just don't know that we can take the board under 3. But even if you get it down to 3 and you have a 40-cent under basis, that's pretty favorable cost of gains.
Yeah.
So we'd be in good shape.
You look at some of the reports that packers are losing money. First of all, do you think they're losing that much money? And second of all, do they have to in order to just buy the short supply of cattle that's out there?
It's a great question. We're having a lot of trouble anymore. There's absolutely no correlation between box beef price and their profitability, because they have so many value-add products and we don't know what goes to export. I just can't think they're doing as bad as they'd like to make you believe because of their aggressiveness for cattle. But that is due in part to they don't want to lose market share. If Swift has a customer, whether grocery store ABC, if they go to Swift and Swift doesn't have any meat because they've cut their hours back because they didn't buy any cattle, they're going to go to Tyson, and Swift won't get them back. And so that's why you've seen this competition out here. These guys do not want to lose market share, so they just keep paying up to get the cattle on, because it's a really small supply. Now your question is, well then, why do they keep doing it if they're losing money? because they'll lose that customer, and that customer is apparently still able to sell that beef at these prices, so there's still demand out there. So it's a wonderful situation if you have cattle on feed.
Well, it looks like it's not tough to find them. Is that accurate?
You know, that's a really good question. September and October, you can usually, the availability is pretty good. The availability is starting to get extremely tight, and I think it's just going to be more so because you always get a dead zone here because these guys that want a background or hold their cattle out to the first of the year. What's going to be interesting to see what are our receipts in January versus what they typically are, and if that number's down, then you're going to see high cattle prices for quite a while.
What about margins per head?
Margins per head keeps getting smaller because we're really smart in the cattle industry. We drive all the margin out of our feeder cattle because that's what we do. There's still a lot of competition to cover feed bunk space, so we drive these things up, and profitability's been good. The thing that scares me as I'm buying it, your deferred markets are as much as $20 cheaper than it is right now, and to just assume that the deferreds are going to come up there, I don't think I want to make that assumption.